Hello, welcome to the Brew. I'm your host, Lex. Today, we have a special guest, Chris Brecher from Simpler Trading. And we're going to talk a lot about some setups. He is an old dinosaur like me in the trading business. We'll refer to that in a second. But let's bring Chris out and meet him and get into it at the opening bell. See the lead, the end music, the fade out. Oh, Max doesn't know how to turn this off, but he got it. How you doing, Chris?
Fine. I have a question for you. I saw the lead in of the Trading Places scene.
Yeah.
And do you you're in Chicago, right?
I'm in Chicagoland. Yes.
All right. Do you remember Outtakes, that bar with the aquarium?
Oh, of course.
So I'm in there right after Trading Places, and here I am, cocky person on the floor, and Eddie Murphy walks in with his whole entourage. And I'm like, and I had the guts. I went over to him and said, "Do you want to get a tour of a real exchange?" And instead, his brother said, "No, but do you know a lot about penny stocks?" And I started with a boiler room. So I sat with him for like 3 hours talking about penny stocks.
Oh my God. That is unreal. So he didn't want to see the trading floor, though? I would have.
No, he didn't want to see the trading floor. It's probably a pain to have anybody talk to him in the first place, but it was fun to sit at his table and talk about that. I was, just cocky from the floor.
Right. Well, say from the floor. So let's get to that right away. So you're with Simpler. We'll get to that in a second, but let's go back a few steps to the SIBO days, right? So you and I both come from that environment. Both floor traders back in the day. Not much of that going on anymore, it's safe to say, right? Couple handfuls of market making firms out there, the big daddies. But you can't really strap on your old ugly tie and hop down to the floor anymore, as it were, right?
No, I use the same tie, by the way, for probably about 5 years. I wore the same tie every day because it was my lucky tie.
Why not?
And you go through the same turnstile. I mean, we were extremely superstitious back then.
Yeah.
And but it's very interesting. I took my daughter, my wife, to the floor probably about 5 years ago because I'm like, I want to show you the rough and tumble. And it was like a library.
Oh yeah, it's totally different now. So they have the SPX in Chicago, and it looks like it's like busy and active, but it quite frankly really isn't. It's, it's kind of by appointment in a way. So they have that relic. And then I think people who actually trade down there, they have little booths up on either side of that pit or something. Yeah.
It was neat to go down there. And so we're going, and most of it's dark. I mean, some of the pits are dark. They don't have the lights on anymore. And you go into the SPX, at least there's people. And they were buzzing around, and they saw me and go, "Hey, Chris." So that was pretty cool.
Yeah.
So at least that made me legit in the eyes of my daughter and my wife.
Well, that's good. So your acronym was KRS?
Yeah.
Okay. And that has nothing to do with Tinker.
No. I didn't have TNK. I think so. Actually, one of the SPX traders had that.
Is that right?
Yeah.
Yeah. And you said you were pre-show, you were in Chrysler for a little bit and then moved into the IBM pit, right?
Yeah. I basically made some money in the Chrysler pit when I started out, and the seats to lease. So let's say I had $10,000 and the seats to lease were $10,000 a month. So I had to make $10,000 just to break even. I decided to try the IBM pit and sort of close my eyes and do it, and it worked.
That's good.
But
I remember the seat leases. Yeah, exactly. I do remember the seat leases. That was something I always hated. I think they got charged on the first of the month or the last of the month or something. I always hated that day. I was like, oh, geez, not another seat lease.
Yeah, it was 22%. I mean, boy, they were golden if you owned a seat and leased it out. And there was a friend of mine that had a seat on every exchange.
Oh, nice.
So, and just leased them on the Picos, the Philly, everywhere.
That's a good income, right?
Oh, yeah. And then they all went public.
Right. Yeah, I know. Okay, so now what are you doing now, Chris? So you're with Simpler Trade. Tell us a little bit about your, where you are now, what we're going to talk about here, and if we need to share a screen, we can do that. So give me a little backdrop on Simpler and what you're looking at these days.
Well, I still day trade all day, but it's Simpler is a education site. I'm sharing my screens. I'm showing ideas. So I'm showing my trades and showing my thought processes of how I go through the trades. As even if I wasn't on live, I'd be doing that. And I like to have 3 reasons to do a trade, but I'm educating, but also showing people the way I do it, which when I was on the floor, same thing. You try to grind it out.
Right.
Like today, I probably had 2 out of 5 trades right, but the 2 trades have been twice as much as the bad trade. So we came out ahead.
Okay.
So like a pitcher with not their best stuff winning, not like the Cubs. But it's but that's what I try to show them is cutting losses, showing good setups, and not get psyched out because there are all these algorithms like we talked about before.
Right.
Because I have a number of questions like, how do you beat the algorithms? It's like the algorithms can be just like crossing a moving average. They're extremely simple, a lot of them. Right. So, which doesn't hurt being with Simpler Trading. But basically, we're looking at the same moving averages a lot of other people use, but I use chart patterns a lot.
Okay.
And it seems like that still works.
Okay. So do you think here's what I found a couple things, right? So being in our position as floor traders, market makers back in the day, completely different behavior from how we trade today as, screen traders, retail traders, whatever you want to call it, right? So we got to post a bid, post an offer, continuous, and we get hit on those, right? We'd buy our bid, sell our offer, and that's where our edge component was, right? So now we don't have that ability as retail folks. We have to get somewhere in between the market if we're lucky, right? Hopefully midpoint for the most part, makes you feel good. So you've adopted this chart strategy, technical sort of analysis a little bit.
I did when I was on the floor. I also did it where I charted. A lot of people didn't chart.
Yeah.
And a lot of people didn't do the correlation. So when I worked for the book, because that's how I started on the floor.
Yeah.
The people on the other side, the traders, would talk out loud about their thought processes of, watch the bonds and all that.
Yep.
So I've watched a lot of correlations, but I charted back then when a lot of other people didn't. So I was very popular in the IBM pit. So a lot of times I wouldn't buy on the bid. I'd take everybody out of their offer. So that was one of the few pits where you could trade against each other, that in the OEX.
Yeah.
And, but that was from charting. So when I decided to go up to a day trading firm, it was a lot easier transition because I was already charting and using correlations instead of just the edge.
I gotcha. That's interesting because I always tell people I do some speaking around the country a little bit, and they always like to hear my perspective on the market making side, right? And I was not a charter because technically I didn't really have to back in those days. So I was never very good at it, and they can't understand that. Well, how do you get your edge? Where do you get that? And I'm like, it wasn't from charts for me, at least back then. It was something completely different. But I could see how it's super valuable now. As retail folks, we give up a little edge to get into the marketplace, right? Typically. I mean, if you're trading spiders, I get it. It's a penny wide. But most of the time we give up a little edge. So we have to have that other edge built in somehow. So we have to have some good reasons for doing things.
Yeah, exactly.
Yeah. So, and are you able to show us a few things on the screen of what you're looking at?
Yeah, it's really funny because I'm sharing my screen and right now it's been slop in the market, but yesterday wasn't. So let me show you. So yeah, I'm a lot into chart patterns. I'm also into the more points of contact, the more important.
Okay.
So that's sort of it, but I'm really into consolidation patterns. So you don't really see it here, but if you put the NDX yesterday in the last 10 minutes, let me get it up here for you. Let me try to find it.
We had a pretty big upward move. Was it yesterday? Was it when that happened?
Oh, it was massive, except the last like 5 minutes.
Okay.
The last 5 minutes, you had a defined trend line that formed, especially in the SPX.
Right.
And that you could play. So here you go. Here it is yesterday, right here, that defined trend line.
Yep.
So the problem is so many want to short it. I like these little arrows I discovered.
Oh, those are
like
cool.
to short it all the way up.
Yeah.
When it's really, you need to find that defined trend line, because at least if I'm wrong, I know where to stop myself.
Gotcha. Now, how do you define that trend line? Whether, how does that define a trend for you? Is there anything special there that we need to know about?
Well, couple of things. The more points of contact, the more important.
Okay.
That's number one. Number two is companies can't buy back stock the last 10 minutes.
Mm-hmm.
So if the companies like the Apples and the Nvidias were the thing that made the markets go up all day, it makes this trend line more likely to break to the downside at the close, because we're really into probabilities.
Mm-hmm.
And it's really fascinating to see what happened in Nvidia. I mean, the stock's been a monster, not so much yesterday,
Mm-hmm.
but look what happened the last 10 minutes yesterday.
Right.
There you go. I mean, that's pretty impressive. That's 10 minutes exactly at 15.50 when they can't buy back stock.
Mm-hmm.
The stock just got murdered.
Wow.
And Apple did the same thing. Check this out. The end of the day, right? Well, a lot of people anticipate Apple beforehand.
Yeah.
But look at that. So these trend lines, we look more for those type of trend lines at the end of the day,
Okay.
because they've worked so much in the past.
Gotcha. So, and where on that chart are you thinking about getting into a trade? Long, short, or whatever?
Well, in here, what we've been doing is when we see this defined trend line,
mm-hmm.
we'll go and buy maybe a 217.5 put.
Okay.
Now, the thing is, though, for premium, I don't mind buying premium on a Monday. You get on a Thursday, it better be a real tight pattern.
Right.
You're gonna get nailed on the on the premium decay. And like, I mean, we took advantage of doing the opposite, always selling premium.
Sure.
Even if you were bearish, you sold calls in the direction you thought that it was going.
Yep.
But now you can definitely buy premium like a Monday.
Okay. And you're not really sitting with this premium for any massive length of time, right? Is your
No,
short
10
term?
minutes.
Oh, okay.
Yeah, 10 minutes.
Yeah, I got you.
And
You're looking for that move then, and then you're getting out. That's the end of the story. If you get your move, boom.
Yeah, as you see, thank goodness. I mean, look how it gapped up. But yeah, that's you're just going for the end of the day.
Okay. Is there any particular time frames that you like to look at on the charts? 1 minute versus 15 versus daily? I mean, I'm assuming it's a tighter time frame. Since you're getting in and out.
Yeah, when I'm day trading, I usually use a hourly just for to see if the overall stock I'm trading is in an uptrend or downtrend or overbought, oversold.
Yeah.
And then I'll use an hourly 15, 5, and 1.
15, 5, and 1.
Yeah.
Okay.
So I was trying to get it set up so you could see it. Let's see.
Yeah, go ahead.
There. Well, that's 6 stocks. Let's get 6 time frames for you. But basically, we'll use 4 time frames.
Okay.
Yeah, like that.
Right, so what am I looking at? Tell me what I'm looking at here.
All right. We'll have an hourly, 15-minute, 5-minute, 1 minute.
I gotcha. Okay, I see it now.
And what we'll do in there is we'll usually use an ATR trailing stop as our trend identifier, just so we stay on the right side of the market.
Gotcha.
And we use a standard ATR trailing stop of 9 and a 2.9. Then if a stock moves too much on a 1 minute chart, all of a sudden it gets too far from the ATR trailing stop. So we'll use like a 20 moving average. And that's a point of contention, because some use 20, some use simple, some use 21 exponential, but they're close enough.
Okay.
Where you're just trying to stay on the correct side. But if I see the NASDAQ just going straight up, then I'm not looking for the bearish pattern on a 1 minute. I mean, it might be overbought, so I don't want to chase it
Mm-hmm.
even on a 15-minute, but that's why I have multiple time frames. And then on the bottom, I'll have little oscillators. So I use a MACD, you can use
Mm-hmm.
a RSI, you could
Mm-hmm.
use anything that helps you with overbought, oversold. And like
Okay.
you see on an hourly on the top left,
Yep.
when it got overbought, it didn't mean you're going down because, people, it can stay overbought. I
Right.
mean, people always mess that up,
Mm-hmm.
but it just told you not to chase it right there.
Gotcha. Okay. Good. And then are you just when you get your signal and you're ready to make a move, are you ever doing spreads
Yeah,
to
all the time.
so not just straight options? You're not just buying calls or puts necessarily.
No, not at all. Usually I'm doing them as, let's say, butterflies or put
Okay.
debit spreads, or, well, like, we used to just call it put spreads, but like buy put spread, but now it's
Right.
put debit spread.
Yeah, you gotta or they're bull spreads and bear spreads. I go, hold on, I gotta think about that a second. Just a
Oh,
second.
yeah, like, do you sell a credit spread? I mean,
Right.
I've seen that kind of thing, but
Yeah.
overall, I try to do them as spreads unless it's like on a Monday and it's a
Yep.
tight pattern for 10 minutes to go.
Gotcha. Okay. So I got to ask this. I know this is an important topic. I want to see what your response is. The rise of zero DTE, super popular, right? All this stuff work with the zero DTE. How have you adapted to that? I mean, I got to tell you, my phone rings. It's always about zero DTE now. So that's all the questions I can answer is around that for the most part. What are your thoughts with that newer thing?
There's a couple of ways. There's
Yep.
either the spread ideas, and we talked about it before, that we'll play the SPX, no doubt about it. We'll play the SPX and play it as spreads using zero DTE,
Mm-hmm.
playing that premium decay. And if we go in, let's say, a lot of times what we do, I'll post like, we're pretty aggressive the first couple of hours.
Okay.
Try to make our money the first couple of hours, and then use, let's say, a fifth of the money at the end of the day, calling house money if we see shots. Like if we see a defined bull or bear flag, maybe we'll take $50, $80 out of 400 you might have made and take a shot with that on these things that the risk reward is huge. Like now, the SPX is 54.85. I sort of like the market here. That's the problem. But just at the end of the day, all of a sudden, if the 54.85 calls are like 5 cents with it right here, that's a cheap shot.
Sure. Yeah, I noticed that that last, I don't know, 10, 15 minutes of the day, there's some pretty pronounced moves in that last 15 minutes or so. I've seen.
Yeah.
Any rhyme or reason to that? And my feeling is that dealer being a market maker and all those firms, my dealer sort of Gamma and Vana and all that kind of crazy stuff kind of it's overwhelmed in something like the SPX because it's a $1 trillion market, right? Multi-trillion-dollar market. It feels like their Gamma in the billions or even hundreds of millions can't even scratch it a little bit. But I wonder what else is going on with those sometimes pretty steep moves at the end of the day. Any thoughts around that?
Yeah, it's sort of interesting that companies can't buy back stock the last 10 minutes.
Okay.
And companies voluntarily don't buy back stock 5 weeks prior to earnings.
Okay.
So what that means to me, there are all these people say, oh, buyback blackout, that means market's going down. No, it usually means to me that bearish patterns are more likely to work. But it doesn't mean the whole market has to go down if there are no bearish patterns. But they can't buy back stock the last 10 minutes. So most of the time when we play the end of the day in the SPX or the QQQ or the SPY, it's on the downside, not the upside, even though it can go up. But they go down. If you see a bearish pattern, it's much more likely to work the last 10 minutes because of lack of buybacks.
I gotcha. Okay. Interesting. Now, do you sell any premium in these things, these zero DTEs, like we talked about earlier? Is that one of your strategies as well? Grab a little bit of theta earlier in the day, take it in, then go on to the next move. Yeah.
Yeah. I mean, we've seen it. You see it all the time that the expected move coming in is, let's say, 27 in the SPX.
Yep.
Like an hour later, it's 19.
Right.
So if you could do some butterflies and scalp a couple of points out of it, not bad. Plus, if a chart setup is there, you can do, let's say, the butterfly in the direction you think it's going, and you make
Sure.
the theta, and you also make some of the delta.
Yeah.
So,
Sure.
but yeah, there's a lot to do. That's why we try to be aggressive the first 2 hours and make our good money then.
I like it. I like it. Yeah, we're seeing a little bit with the butterflies. We're seeing the broken wings where they're not uniform, so that if you're wrong, let's say you got it to the upside. You got the 10 point on the bottom and a 5 point above it. So if you're really wrong and it really screams through your strikes, you still make the difference between 10 and 5 less what you paid for it, right? So
yeah,
people like that one. It's easy. They say, okay, if it hits in the middle, wonderful, I win. But if it doesn't and it goes well through, I can still win a little bit. So not so bad.
Yeah, it's funny you mentioned that because it just through the years with simpler trading, so many times, and they all laugh in the our subscribers in the chat because we're too right. So that's why broken wing is a big deal.
Right. Oh, that's
definitely it's a big deal. We've had times, well, you see it with SMCI or Tesla or Nvidia,
right,
where you might want to take advantage of premium, but you have to do them as broken wing.
Yeah.
If you're going to even think of doing butterflies in an Nvidia.
Right. Yeah. I mean, it's, look at it. It feels like I'm trying to pin the tail on the donkey a little bit with
exactly
those stocks, So I want to be, and I always like it when I speak. I always like it to be, and it's kind of not a great metaphor, but we're throwing grenades. We just need to get close. We don't have to hit it right on the knot. We just need to get close. We'll do our damage if we're pretty close. And if we're not on the broken wings and it goes well through it, we still win. I love that. It's such a great concept, right?
Exactly. It was like on the floor. If you ever were in a takeover room or stock,
yeah,
and you want to do a call spread, you had to do it as broken wing,
right?
Because it stops trading on you, but you're golden.
Yeah, exactly. I agree. So we're going to finish up. This will be session 1, Chris. So we're going to do 2 and 3 down the road, maybe 4, 5, 6, and beyond. That'd be awesome.
Sure.
What's on the watch list for the week? Anything we can leave as a nugget for people, or anything specific you're looking at?
Yeah, it's funny because you think it's game theory because this XLK, the technology select, is 45% Microsoft and Apple, and it's done by capitalization. And the Nvidia is only 6%. But now Nvidia's gone nutso since the split, and now it's overtaken them. So now State Street has to buy like $11 billion worth of Nvidia. But that was figured out on Friday because it was as of last Friday.
Right.
So then you're like, well, isn't it already in the stock? Well, I guess not. It went straight up today. But it's going to be real interesting on Thursday or Friday if it's already exhausted. So I'm going to use sort of Apple as a tell. In fact, you could see it right now in the last 15 half hour.
Yep.
That Nvidia sold off a point and Apple's rallied at 1.5.
Okay. Wow.
So I'm definitely going to be watching that. And then I'm like, are there any others that have to be bought, like Broadcom or Lam Research? They're not acting like it, but they've already had that's another thing we're going to be doing this week. So many of these are so far from their moving averages,
right,
or above their Bollinger Bands or the VWAPs, that it would be healthy if they came in a little.
Sure.
So in the crazy ones, we'd love to look for bearish patterns, but you got to find the patterns. You can't just stubbornly short it.
Yeah, that's what I do. Stubbornly short it. I'll be right one day.
No, I do that too. I mean, it's really easy to say, oh yeah, you got to wait for that. I do it too. Yeah. You always jump the gun.
Right.
But what I try to show people is 3 reasons to do something and 1 reason to get out. But when I have only 1 reason to do something, my track record is not as good.
Not as good. 100%. I love it. That's great. Okay, great. So we're running a little bit tight on time. Let's pick up, another conversation in session 2. What do you think? And we'll go back and look at some of this. And is it safe to say you're pretty bullish on NVIDIA still with all this out there?
No, This is sort of overcooked,
Okay,
but it's
good
the
to
same
hear.
thing. We can say it's overcooked. It could go up another 10, but I'm structuring some put spreads for next week.
Okay, that's
But,
soon.
it's like a horror movie, a slasher movie. The slasher's coming out. You just don't know when. So
Exactly.
I'm not sure from where with NVIDIA. I'd like most of the post-split stocks like Tesla,
Yep.
even Cisco. They had a massive reversal to the downside, and then they consolidated. So they had that damage. And
Mhm.
NVIDIA hasn't had that damage. So it's definitely jumping the gun right here.
Yeah. Yeah, I put on a put spread, a broken wing butterfly to the downside, pre-split, and it's done nothing but go up. That wasn't the greatest thing. But it's got time. So, I didn't do it for a 1 week kind of play. It's a little bit longer. So we'll see.
Yeah, it's usually they come back to where they announce a split,
Yeah.
but it's so far from it now. It'll take a while, I guess. But I'm definitely looking for that big red candle, I call it, on an hourly.
All right.
Looking to get even more aggressive on the downside in NVIDIA.
Perfect. Perfect. Well, very good. All right. Well, Chris, great to see you again. I think you were passing out of the SIBO when I was probably in the midst of it. Sounds like you left in the early 90s, I think you said, right?
Yeah, 93.
Okay. Yeah, that's kind of when we were just getting cranking. So all good. Well, great to catch up. We'll do session 2 in a week or so, and
Yeah,
then
sure.
move on to session 3. And I'm sure the market will give us some new examples to have a look at, and we'll break those down as well.
That sounds great. I mean, thanks for having me on.
You bet. We'll talk next time, Chris. Thank you.
All right, take care, Lex.
All right, man.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc. All rights reserved. Member